NVIDIA stock is currently priced at $215.20 per share, reflecting an intraday gain of 1.75% as of the close of the most recent trading session on Friday, May 8, 2026. Because the market is currently closed on this Monday morning, May 11, we are looking at a valuation that has pushed the company to a staggering $5.23 trillion market cap, marking a fresh 52-week high of 217.80 during that session. While most investors are fixated on the raw price action and the massive trillion-dollar milestones, the real insight that exceeds expectations right now isn't the price itself, but the massive structural shift in institutional accumulation occurring just days before the May 20 earnings report. Even as the stock touched those all-time highs, the Chaikin money flow indicator, which tracks where the big money is moving, hit a reading of 0.34. This is an incredibly high level that suggests institutional buyers aren't just holding NVIDIA stock, they are aggressively adding to their positions despite the record prices. Usually, you see big players trimming at all-time highs to lock in gains, but the data shows they are actually accelerating their buys, creating a coiled spring effect heading into the end of the month. The common narrative surrounding NVIDIA stock right now is that it has become a victim of its own success, priced for perfection and vulnerable to any slight miss in guidance. Many retail traders using investing sites or a Robinhood app are worried that the easy gains have been made and that the valuation is stretched beyond reason. They see the $5.23 trillion cap and assume gravity must eventually take hold. However, the deeper reality is that the market is actually undervaluing the transition from the Blackwell architecture to the newly announced Vera Rubin platform. While the general public is still talking about the H100 and H200 chips, the smart money is looking at the Vera Rubin platform as the foundation for a global commodity market in intelligence. Jensen Huang recently suggested that this new hardware could drive over $1 trillion in sales through 2027 alone. When you contrast the expectation of a slowing growth rate with the reality of a new product cycle that offers 10 times higher performance per watt, you realize the current consolidation range between 180 and 216 might have just been the launchpad for a re-rating toward the 250 price targets being set by Goldman Sachs. Looking at the immediate trading volume, we saw 136 million shares change hands in the last session, which is significantly higher than the 30-day average. This tells us that the conviction behind this move to 215.2 is supported by high liquidity. We are seeing a textbook bull flag pattern on the daily chart. After hitting 216.87 in late April, the stock took a breather, drifting down to test the 20-day exponential moving average near 198. The fact that it bounced off that line with such force to reclaim the 215 level confirms that the trend is very much intact. If you are tracking this on a Fidelity trading platform or Interactive Brokers platform, you'll notice that the put-call ratio has actually moved back toward a bullish bias. There was a temporary spike in hedging activity when the stock dipped below 200, but those hedges are being unwound as the market prepares for the May 20 catalyst. Macroeconomic pressures have been a factor, with interest rate concerns lingering, but NVIDIA stock has largely decoupled from the broader tech sector's volatility because its revenue isn't just theoretical, it's being fueled by concrete capital expenditure from the hyperscalers. Institutional activity is the backbone of this current run. When you look at the holdings within the Vanguard Information Tech ETF or the Investo QQQ Trust, NVIDIA's weight has grown to the point where it is the primary driver of the entire index's performance. For those managing their own individual brokerage accounts or utilizing Schwab Intelligent portfolios, the question often comes down to whether they should buy at these highs. The reality is that Meta recently raised its 2026 capital expenditure guidance to $145 billion, and Microsoft flagged a planned $190 billion. That is not money being spent on software or office space. A massive chunk of that is earmarked for Blackwell GB300 GPUs and the upcoming Vera Rubin systems. This provides a guaranteed floor for NVIDIA's order book that many analysts feel isn't fully baked into the current 215 price. If you're a long-term investor using Fidelity Wealth Management or SoFi Active Investing, you're looking at a forward price-to-earnings ratio that is actually lower than the company's 10-year average, despite the stock being at all-time highs. That is a rare divergence where earnings are growing even faster than the share price. To understand the core of the business, NVIDIA operates through two main engines, the graphics segment and the compute and networking segment. While many people still associate the brand with GeForce gaming chips or the GeForce Now streaming service, those are now the smaller pieces of the puzzle. The real power lies in the data center platforms. They aren't just selling chips, they are selling entire AI factories. Their NVLink interconnect solutions and Mellanox networking hardware create a moat that competitors like AMD or Intel are struggling to cross. By controlling both the processor and the communication between those processors, NVIDIA ensures that once a company builds on their architecture, the cost of switching becomes prohibitively high. This business model has allowed them to maintain gross margins that are unheard of in the hardware industry. Even as they face pressure from custom chips being developed by Google, Meta, and Amazon, the reality is that NVIDIA's software stack remains the industry standard. For anyone involved in online investing or self-investing, understanding this software advantage is just as important as knowing the hardware specs. Comment below how many shares of NVIDIA stock you currently hold or what price target you are looking to take profits at. It is always interesting to see the sentiment of the community as we approach these major earnings cycles. As we look toward the future, the catalysts for NVIDIA stock extend far beyond just the next few months. The partnership with IN to deploy up to 5 gigawatts of AI infrastructure and the long-term manufacturing deal with Corning show that the company is vertically integrating its supply chain to avoid the bottlenecks that slowed them down in 2024 and 2025. The risk, of course, is that the concentration of revenue in a few massive customers creates a single point of failure. If Microsoft or Meta decided to pull back on AI spending, the reality would fall sharply below the high expectations currently set. However, the counter-argument is that we are seeing a shift where AI is moving from a training phase to an inference phase. Training a model takes a lot of chips once. Running that model for billions of users requires a massive permanent fleet of hardware. This is where the Vera Rubin platform comes in, promising a 90% reduction in inference token costs. That kind of efficiency makes it more likely that companies will keep spending to keep their operational costs down. In terms of the technical setup, the next few weeks are critical. A daily close above 217.80 would confirm the breakout from the bull flag and could easily clear the path toward 236 or even 250 by the time the May 20 results are digested. On the flip side, if we see a failure to hold the 210 level, the stock might revert to testing the 20-day exponential moving average near 191. For traders using a Robinhood stock trading account or the SoFi trading platform, these levels represent the boundaries of the current tension. The high expectation is a massive beat and raise on May 20. The reality will depend on whether Colette Kress, the CFO, can point to a seamless transition into the Blackwell and Rubin shipping cycles without any major delays. The recent appointment of Suzanne Nora Johnson to the board also signals that the company is looking to strengthen its ties to the financial and global institutional world as it moves into this new phase of its corporate life. Whether you are using Fidelity IRAs for long-term growth or a Robinhood crypto and stock account for more active moves, the central takeaway for NVIDIA stock right now is the sheer momentum of the institutional bid. We are seeing a company that is effectively the central bank of the AI economy. They aren't just a participant, they are the infrastructure provider for every other company trying to innovate in this space. The gap between what people think NVIDIA is, a chipmaker, and what it actually is, a foundational computing platform, is where the investment opportunity still resides. While the price at 215.2 feels high compared to where we were a year ago, the earnings power behind that price has never been stronger. The institutional accumulation we are seeing is a clear signal that the big players believe the reality of the Vera Rubin cycle will eventually exceed even the loftiest expectations of the current market. Ultimately, the authoritative view on NVIDIA stock as we sit here on May 11 is one of strategic patience. The market is currently in a state of high tension, waiting to see if the triple-digit growth rates can be sustained. If the data center revenue continues to compound at this pace, the historical valuation models suggest we are still in the middle of a significant re-rating rather than at the end of a bubble. The professional consensus, supported by the Chaikin money flow and the massive hyperscaler capex, points to a stock that is being aggressively positioned for a breakout. By understanding the difference between the noise of daily price swings and the signal of institutional buying, you can navigate the volatility with much more clarity. The path to 250 is open, provided the upcoming earnings report confirms that the next generation platforms are shipping on time and at scale. This is the reality of the AI trade. It is no longer about potential, it is about the physical delivery of the most valuable hardware on the planet. Keep your eyes on the volume and the key moving averages as we approach the end of the month, as they will be the first indicators of whether this fresh 52-week high is a ceiling or just another step on the way up. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.